What's up everyone, Brad here from the Money Dad channel. In this video I want to talk about Apple and a pattern that I see on its stock chart that projects bullish activity going forward. Very bullish for the stock according to this pattern. I want to show it to you guys because I think this looks really good for the stock going forward. There could be some money to be made here in a trade, or if you are just bullish on this stock and this company, you are long on this stock and company for the long term, then this might be something that you want to see because this is a very good sign for this stock and company going forward, I think, according to this stock chart pattern anyway. So let's jump in. I've got TradingView open on the screen. You can see Apple's stock chart. We're looking at it right now in candlesticks, and I've got it all the way back until February of 2020, and we've had this great bull trend going since the March pandemic lows, and it looks like we reached a high here in August-September time frame, and we've been kind of chopping sideways, a little bit low, but generally just kind of chopping sideways since then. And then right around, well, what's this time frame, the end of December, we reached those highs again, right? And some may think that this is a double top, which is a bad sign. A double top is when you hit that same previous high and you don't break through it. So if you draw a line, it's literally, you've reached the top twice. It's a double top, and it's not a good sign for a stock because it shows that you've reached a certain price level and you failed to break through it 2 times in a row, and that can be considered a bearish or a bad sign for a stock. I don't see that here, and I'm going to tell you why right now. I don't see a double top. I see a potential cup and handle pattern. I do think that double tops happen. They happen often, but some double tops are cup and handle patterns, which can be disguised as double tops. So you have to be careful when you're looking at double tops. Now, if this price action would have, if we would have hit this and then we chopped up and reached it again and chopped lower or something like that, yeah, that would have been a double top to me anyway. But this is not a double top. This, to me, is a cup and handle pattern because we have this bull trend going up, right? We already confirmed that. We see this huge bull trend coming up. We've got what looks like a double top right here. Well, that was a really bad line. Let me try that again. That we have this what looks like a double top right here, right? We've got these two peaks that top out right around the same level. It looks like a double top, but the price action in between creates a cup. Okay, that's a good sign because now we're creating what's called a cup and handle pattern. Let me click over to Google. I just Googled cup and handle pattern. I clicked on images and you get a billion of these. Okay, you guys can do this yourself. It's super easy. I just clicked on one that I thought was a decent representation of what I'm trying to explain in this video. It's a cup and handle pattern for a stock. You need a bull trend going into it, and then you have a peak here. You have price action that resembles a cup, so a rounded bottom, and then you have a peak and a handle, so kind of a consolidation phase where you're just kind of chopping to the side or slightly lower, and then you break out of that handle eventually, and after that breakout you shoot to the upside. Okay, so this is a very bullish pattern for a stock, but you have to make sure that you are meeting all the wickets. You're meeting the requirements here for a cup and handle pattern. So what are the requirements for a cup and handle pattern? Well, we've already gone over a couple of them. One of them is a bull trend. One of them is a double, kind of a double top, right? You've got these two spots here that create the top of the cup, the lid, I like to call it, right? You've got your lid right there. And then you have a handle forming, right? So we're getting close to having a full cup and handle pattern on Apple, right? And maybe like some coffee in your cup, so we'll get some steam going there. This isn't quite bullish yet until we have more price action that breaks above the lid of this cup. Okay, we need these candlesticks to keep chopping higher. We need to break above the lid of this cup. And after we do that, I will be extremely bullish on this stock. Extremely bullish. The reason why is because we can actually measure an exact price target to the upside. After we break out from that handle, we can put a price target on that based on the depth of this cup. Let's go ahead and measure the depth right now, and let's figure out what that price target is going to be. If we think maybe that's the bottom of our cup right there, the bottom of that candlestick, we can go ahead and measure it to the lid of the cup, and you get about $30.75. Okay, so that is our measurement, $30.75. If we think that this handle chops straight back up to the lid from here, then we take our ruler and we go $30.70 from right there, that lid, we measure up $30.75, and we get a price target of $170.50. That is the price target on Apple if this handle continues to chop up and break out above that lid of this cup. Okay, this is a reliable stock chart pattern. This is not voodoo magic. Cup and handle patterns have been proven by historical data to be more reliable than not, right? They win trades more often than they lose. They are a winning bet. This is not, just some random crap I'm throwing on the screen here. I'm telling you guys, cup and handle patterns work more often than not. What I'm not telling you is this is not 100%, right? This is not definitely going to happen. This is a probability play. And it's also not a play until we break out above the lid. We need this to chop higher. This handle needs to finish forming, get above this lid, and then we enter a trade and we target $170.50. And even then, it's not 100% that we are going to head straight up to $170. It is more likely than not that we will do that, but we're working with probabilities here. So there's no guarantee that that's going to happen. It's just more likely than not. So with all of these stock chart pattern trades, we deal with probabilities. We don't enter trades that have less than 50% chance of playing out, right? Because that's a losing trade. We're just losing money. It just doesn't make sense. We enter trades that have a more than 50% chance of playing out, and cup and handles have a more than 50% chance of playing out. And what's nice about seeing a cup and handle on a massive mega cap blue chip stock like Apple, the biggest company in the United States, is that there's not nearly as much volatility with this stock if we end up on the losing side of a trade, right? If this doesn't go to 170, if we break out above that lid and for whatever reason we just start to break down, we're not going to lose a ton of money because it's a mega cap company. It only moves a couple percent a day at the most, right? It's not one of these micro caps that we trade on this channel as well, like Fuel Cell and things like that. Like those kinds of stocks will move 10% in a day, and that's a normal day. Whereas Apple, if it moves 3 or 4% in a day, that's a massive day for Apple, right? So we're not risking our bank account on this trade here, right? So that's what's kind of nice about this. Meanwhile, we have a price target to the upside that is $30 on a $130 stock. You know, we're talking 22% upside. It says it right here. 22% upside on this trade. That's pretty nice upside for a company that has pretty low volatility compared to some of the other trades that we're getting into on this channel, right? So I really like the risk reward here. I mean, Apple has done nothing but gone straight up for decades, it feels like. So I don't know why you would bet against this company. If you bet on this company going up, you're almost always going to be right. And we have a cup and handle pattern on this company that suggests it is going up. So, I mean, the stars are kind of aligning here for Apple. I really like what I'm seeing. I love the products. I love the company. You know, I'm a big buyer of their products. You know, I invest in their stock long term. But for the short term, you know, this channel has kind of become more about short-term trades. Apple looks really good in the short term, especially if we can break above this lid right here. This handle can complete its handle, break above this lid, then we enter that trade and we're targeting $170. It looks very good for Apple in the short term. Okay, so that's what I've got for Apple. Long story short, I am a fan of Apple long term. That said, this video was about the short-term trade for Apple, which is bullish. So my outlook on Apple is bullish short-term, bullish long-term, bullish medium-term, bullish everything Apple. I just see a stock chart pattern that should play out over the short to medium term that is very bullish for Apple. I think we are going to $170 probably if we can break above this lid that is in the $139 range. So really that's our current target, is we need to get above 139. And if we get above 139, I think we are going to 170 quickly. Okay, that's what I got for Apple in this video. I hope you guys liked it. If you did, hit that like button. If you're not a subscriber yet, hit that subscribe button. I do stock chart pattern analysis and stock price predictions based on those chart patterns. If you like stuff like that, hit that subscribe button. Leave a comment down below. I'll see you guys there and in the next video. Thanks, guys.